Francis, you will share your own slides, so please go ahead and start sharing.
Thank you. I think Sustenance has done a good job. He deserves an applause. And since
Definitely.
since since he's done a good
Francis,
job, I think my work is done.
Francis, thank you very much.
No, really appreciate
Francis
that.
is my fiercest competitor in the market, but my brother as well. So we do go along very well.
That sounds wonderful, helping ultimately the Ghanaian population, which is great to hear. So, Francis, if you could, to follow that up on that very nice note, if you could quickly introduce yourself and take us through your presentation.
Sure.
Thank you.
First of all, let me confirm if you're able to view my screen. And the mode is okay for everybody.
It is visible. Please go ahead. Yeah.
Thank you. My name is Francis. I'm the managing director for aYo Ghana. Interesting. I started my career at the National Insurance Commission. So Mr. Kofi Ando, the commissioner, was my boss there, and Renata as well. And we've come a long way. I started as an actuarial analyst, and now I'm into inclusive insurance. So basically, that is a brief introduction about myself. The rest you can find on LinkedIn. So I'll just briefly share some insights on our experience so far and how technology is actually helping shape inclusive insurance. So I titled my presentation "Ensuring that the Uninsured with Mobile Insurance," the aYo story. And I'm going to cover these 4 areas. It's just a brief slide because Sustenance has done a good job giving us a view about where we are coming from, the regulatory point of view, and how we have evolved. So I'll just skip those aspects. If you look at aYo is basically a joint venture between MTN Group. So MTN Group came on board, giving access to the mobile network operator customer base, and Alliance, Sanlam Alliance. It used to be Metropolitan. The initial JV was between MTN Group and Metropolitan Insurance, Metropolitan Group. Then after 2 years or 3 years, MTN bought the full JV. It used to be 50-50. Then after 3 years, MTN bought the stake in the stake from Metropolitan, so MTN owned 100%. Then last year brought Sanlam Alliance in, and Sanlam Alliance took 50% of the stake. So it was basically a joint venture established to provide a future where everybody uses insurance by leveraging on technology. Sorry, hello. And we started.
No, please continue. If everybody else could mute ourselves, it would be helpful and not disturb Francis during the presentation. Thank you. Please go
Thank you,
ahead,
sir.
Francis.
All right, so we started aYo Ghana in 2017. We had other countries. We started Uganda in 2016, and aYo Ghana came on board in 2017. We were set up to just offer a simple funeral and hospital cash product, targeting individuals that is low income and they're seeking to safeguard their household, informal sector workers without access to traditional insurance schemes, irregular income earners, SMEs, and gig workers looking for flexible insurance solution, just to improve the quality of life, reduce vulnerability, and foster socioeconomic growth for individuals and communities who traditionally lack access to financial protection. In 2020, we started in 2017 as a small team. 2020, we broke even. And once again, to prove to some of the investors who think that microinsurance doesn't really work. It really works if you get the right technology and platform. It works. We broke even in 2020. And in 2024, we added a general insurance product called Pay and Drive, which we are piloting. This is more like a short-term, enable customers to buy cover for a short-term period, like a week, a month, making it flexible for their pockets, especially for the taxi drivers who normally do taxi business for a living. We've insured about 8 million lives. That's about 25% of our population. Ghana population about 32 million the last time I checked, unless maybe Sustenance has given a bit to another child to increase the number. Premium contributions, we've contributed over 241 million cities over the past 7 years. That's about 22 million. That is if assuming you're using an exchange rate of 11 cedi to $1, but I understand that now it is a bit higher. We'll get back to that. If you look at technology, we leverage our technology in everything that we do, and to achieve scale in microinsurance requires a combination of effective marketing strategy, efficient distribution, leverage on digital channel, and optimizing the user experience, which technology actually enables. Because people before microinsurance or mobile insurance came, people are used to face-to-face buying insurance uh, via face-to-face interaction with an agent. So if you're going to introduce a model where people can actually buy it using their phone or through their phone without any agent and doing everything on themselves, then you need a lot of marketing. You need a very effective marketing strategy to land it. And thanks to the foundation that Biba and Co laid, we're able to pick up some of the learnings and actually employ it in our business. And for us, we leverage on mobile money, the mobile and digital platforms, using their USSD platform. So you can actually sign up to all our products using the USSD, just dialing a short code and you go to so a few steps because we are leveraging on the telco's infrastructure or the customer data sitting on sitting in the telco. It's much easy for you to onboard a customer with a few steps. We do SMS. We leverage an SMS platform for clear and simple automated based engagement, text-based engagement. Also, the mobile apps, which we leverage on our own, in addition to that of our telco partner, which is MTN and Mobile Money. And also, we have some form of in-app purchases, making it easy for users to transact and add insurance to whatever transaction that they are doing with ease. Because we have access to the telco database, it enables us to also design a transparent product and also offer options based on the profile of the customer. And that's help us to actually increase our reach. We do also automated sales processes, leveraging on technology, doing one-click purchase options, which reduces the friction of entering information and increasing the conversion rate. Leveraging a bit on an AI chatbots for servicing as well and optimizing onboard and user experiencing. Not only that, not only are these that we use, also the targeted digital marketing campaigns to particular customers using the data available on them. We profile the customers. We look at even friends and affiliates of those customers, and we position the product to them. We do campaigns to them. We leverage on the same channels to do educational campaigns as well, because you need to build trust and share some of the success stories that customers have experienced, those who have benefited from the insurance solution that we have. By simplifying the purchasing process, optimizing digital channels, and building trust, through education and incentive, we can effectively drive our customer acquisition for inclusive insurance at a minimal cost. If you look at the product that we offer, the margins are extremely small. So, for example, you pay $1, you get a $6,000 life cover for yourself and one family member. And to offer such product at that affordable price, you have to keep your costs as minimal as possible. So we need to, one way of doing it is by leveraging on partner infrastructure to be able to offer that. Over the years, we paid over 50,000 claims to policyholders and beneficiaries with over 23 million CDs in claims amount, created jobs for about 800. That is both for the permanent staff and the contract staff. For us, we believe that your ability to deliver means nothing if it cannot be fulfilled at the time of need or deliver the results that people are expected from you. So claims is the only testimony. All the insurance companies are doing the same thing. Say we die, you pay. We survive, you pay. We get sick, we pay. What makes each of us different is the kind of experience that we give to the customer. So for us, making sure that we meet the customer's needs at the point of need is our top priority, to make sure that we continue to put a smile on customers' face. If you look at the aYo logo here, aYo means happiness itself. And if you look at our logo, it's designed to portray smiles. So we always want to ensure that we keep the smile on our customers' face. And of course, we are committed and passionate about improving the lives of everybody. And while this can be demanding, we also prioritize our intention and effort to foster positivity and uplift the atmosphere, creating joy and energizing workspace. Because the work we do, we distribute our product through the call center. We have agents who are stationed at all the MTN shops that service customers, and we have agents also partner with all the MTN, leverage on the MTN activities, and it can be a bit stressful. So we always try to foster positivity and create a joyful atmosphere for the team that we work with. So we can see some of the activities that we do just to energize the team and keep them going. Yeah, when you see all the numbers, you see we have 8 million lives and all those things. Sometimes you be tempted to think that it came easy, but it wasn't easy. Implementing mobile insurance for inclusive can be very challenging due to several factors. First thing that we highlighted was digital literacy, because there's a limited understanding and familiarity with mobile technology among certain target population, and that can be a hindrance to adoption. Even though mobile phone penetration rate in Ghana is about 130%, which means that people own more and more mobile phones than even toothbrush in their homes. It doesn't necessarily mean that everybody knows how to use a mobile phone. Yesterday, when I was in the office, a customer came and we wanted to sign up onto our products. And the agent was educating the customer, asking the customer to dial our short code. And I was surprised to hear from the customer saying that, you know what, I don't know how to do it. And I was wondering, I said, you don't know how to do it? How? Then why are you holding the phone? But let's not disregard, sometimes people hold sophisticated phone, they don't even know how to use it. And there's also infrastructure limitation, poor network coverage, and unreliable internet connectivity in remote and rural areas can also create access issues because you are delivering everything on phone. If you want to give a better experience, like the network has to be stable. Just imagine trying to convince somebody who's used to buying insurance through face-to-face or doesn't even have any idea or doesn't have financial literacy and you want to convince the person to buy the insurance and say you can do everything on your phone. And once the person starts engaging, the network starts misbehaving. It kills the vibe. And it's always important that we have a stable network. So for us in aYo, before even we deploy our agent to go and do activation on market storm, we actually check with the location that the agents are going and see the network, the strength of the network, the RGS, the economic power of the people there. So we use all those attributes in even selecting where we deploy our agents to go and engage the customers to sign up. Also, there are trust issues, building trust in mobile-based insurance, especially in a community where they are unfamiliar with digital and financial products, can be a bit difficult. Affordability, we are ensuring a product, we are providing an insurance that you pay $1 and get like $6 by leveraging our technology. Technology doesn't come cheap because you pay in dollars, you pay your cloud space and everything in dollars. We don't manufacture them or we don't do them in Ghana. And if the economic conditions are not favorable, it challenges the sustainability of the business. So now you need to find alternative ways of bringing other revenue stream to it to balance and sustain it. If not, the profitability of it becomes a bit challenging. Customer engagement, communicating the benefits of mobile insurance provider, adequate customer support can also be challenging, especially in areas where there are language barriers and cultural barriers. We sell through the call center. I think about 60% of my revenue comes from the call center. And when we are calling the customer, you don't actually have a view of the language that the person speaks. So we do the call to the customer, and most of the time, some don't either they don't speak English or they don't speak Cree. And so in our recruitment process, we need to make sure that we have diverse people who can speak other languages and at the call center. Issue of fraud also is a big thing. Mobile money fraud is a big thing in Ghana here. The guys are always finding nice ways or innovative ways of defrauding people. And it's when you're offering a product like this that your premiums are paid through mobile money, you need a lot of awareness and sophisticated systems to be able to keep fraud. Then product customization, designing simple and relevant insurance product that meets specific needs of the target population. It requires a detailed market research and innovation. You can't just go there and say, you know what, this is a product that I think that you suit to the target population and go and deliver to them. I don't think it's going to work. So you need to invest in research, you need to invest in education, and it doesn't come cheap. When I started, if I tell you the amount of money we spent on customer education alone, you marvel. But it was necessary because you want to provide a future where everybody uses insurance. And if you want to do that, you need to empower the customers. You need to understand what they are buying and how to use it. And in using it, they share the testimonies, and that creates referrals for you. So by addressing this technology regulatory support. And at this point, let me give a shout out to our regulator. It's the most proactive regulator that I've ever seen. You know, very open-minded, very supportive in driving financial inclusion. Sometimes they even get us more training programs that we get for ourselves. And we thank the NIC for all the support and in our business. In a strong partnership and community engagement that can create a sustainable and accessible mobile insurance ecosystem. I think that's my last slide. Thank you. I'll pause here and take questions.
Thank you, Francis. Thank you. That was definitely very interesting and informative as well. So, of course, and indeed, a big congratulations to NIC as well for creating the right enabling environment in the jurisdiction for successes such as yourself and Bima in the market. With that, we definitely have time a bit to take a couple of questions for Francis. Any questions?
Manuj?
Yes, Harry, please go ahead.
Yes, I will just try to just let's get the ball rolling and bring more interest. I think very interesting debate to see two competitors sharing the story to regulators. So very nice. So very nice to you both. Very interesting discussion and conversation over here. Just a very basic question. You elaborated on Francis elaborated on the various challenges regarding implementing mobile insurance. Okay, digital literacy, infrastructure limitation, trust issues, affordability, customer engagement, fraud risk, product customization. Just for instance, like for supervisors, regulators, the issues. One of the fundamental issues that's come to mind is all the customers understanding what you're giving to them. And here, digital literacy is a major point. Okay, stop up on the challenges, the factors you elaborated earlier on. So how you tackle? Is there some information, some awareness that you do on a concurrent basis? You do have a Chat GPT say, okay, if you have a problem, go to this. We're going to attend to your query. So how do you tackle as a practitioner, as an industry player? How do you address digital literacy to your customers? Just to share, because you seem to have very elaborated structure and way how you're going about. So just to inform us about the digital literacy, how do you go about that?
So first of all, we leverage a lot on our telco platform or the telco partners infrastructure. In addition to above the line campaigns, I indicated when we started aYo business, the first 4 years we spent so much on marketing, just to educate customers about the product, how it works, and how to use it. And we also educate the customer on how to reach us. So we have other tools that we even use. We have an IBR that's in 5 local languages that customers can actually call and listen to it. And if you want to speak to an agent to service you, you can actually speak to the agent. Of course, servicing 8.5 million or 8 million customers is huge. And you can just imagine the amount of manpower that you need. Thanks to technology now, AI is coming. AI has come, not that it's coming. We have social media channels as well that we use to do the education and awareness campaign. But also leverage on our telco partners call center, because MTN is a big partner. They have a huge call center, so where customers can actually reach the MTN call center and they will be serviced, and every queries that they have is actually dealt with. In addition to the aYo team. So MTN provides us with the first level support, and we handle the second service support. But we do a whole lot of radio interviews or radio campaigns. We do TV commercials and TV campaigns. We do community awareness campaigns. We partner with our telco partner MTN on all its social activities, just to leverage on it and to educate the customers about how to use a product and how to get serviced.
Thank you, Francis. Thank you. Thank you very much.
Yeah, thank you. I see that this also actually answered the question from Suama. So unless she might have a follow-up, I'll quickly ask maybe Moses to ask his question.
Thank you very much. My question pertains to, there's a product you mentioned which has got features that can offer 1 week's cover to taxi drivers especially. Can you kindly confirm if I heard you correctly?
Yes, it's correct. So it's a product that we developed this year. We actually piloting it. We got approved to pilot it. We started somewhere in February this year. We call it Pay and Drive. So basically, it's a motor insurance policy that you can actually buy a cover for, let's say, 1 week or a month. And we designed this product trying to address the challenge that sometimes those who have multiple cars in their house, or even those taxi drivers and truck drivers, that they do what you call hand to mouth. When you work today, what you get is what you use to feed your family. And you see, most of them, they don't even some of them cannot afford just buying a 1 year cover. And so we designed this product in such a way to enable them to be able to buy the cover for the week. Then this week they can actually work, and when they get money, they can actually buy the next cover to insure their car, so they don't get harassed by the police and all those what do you call it, road traffic or motor traffic officials who have been checking the net. And we've made it very flexible for the pocket, and everything is done on your phone. It's located, so you can buy cover anytime, anywhere, and it's integrated into the NIC ID system, and the sticker and everything will be sent to your phone. So it's paperless from end to end.
Oh, great. That's very interesting. But then my concern was around things like product waiting periods and grace periods. How do you operationalize such things around a 1 week's product cover? If you may wish to elaborate on that.
So interesting, there's no waiting period in motor insurance. When you buy and you pay your premium, you get covered. There's no waiting period on it. The actuaries, when designing the product, took into consideration the actuaries, when designing the product, took into consideration all the risks associated with it and price it appropriately, whilst also making sure that it's flexible to the customers.
Right. No, thank you very much, Francis, for your question, for your answer. Maybe one last question, and I see Alma Gomez has a question. Would you like to ask it, Alma?
Sure, I found it. Thanks, Francis, for your presentation. I found it very interesting. What is your claim ratio for that 1 week motor insurance? And what are the limits of liability? I mean, these people can have an accident while they're insured for a week.
It's a very, very new product. I need to check the claims ratio now, but I can check and get back to you. But it's a very new product that we actually piloting on a group of people.
All right.
Fair enough. Thanks.
Okay, so I know, so since we are a bit, we have to keep an eye on the time as well. So maybe I'll thank Francis now. But Francis, if you could just look at the comments section and see in the chat section and see if a couple of other questions are there, if you may answer them, if possible at all, should you be able to stay. So thank you again, Francis. Thank you again for your time. Thank you.
Cheers.
All right. All right. So this now leads us to our next presentation from Mary Nokimo from a senior manager, prudential supervision at the Insurance Regulatory Authority of Kenya. So Mary, please go ahead. If you could just quickly, briefly introduce yourself and then take it forward from there. Thank you. I see Monica's hand is up.
No, that was a mistake. I was
Oh,
trying to
sorry,
read.
apologies. Sorry, apologies, Mary. Please go ahead.
Okay, thank you. As you've heard, I'm Mary Nkoimo from the Insurance Regulatory Authority of Kenya. I'll just share with you our experience with the microinsurance and just to a brief on who we are. We are the insurance supervisor in Kenya with a mandate to regulate, supervise, and promote development of the insurance industry in Kenya. As you've already seen, we have a dual role of supervising and promoting the development of the industry. So when it comes to issues of inclusive insurance, microinsurance, it's core to our mandate so that we are able now to develop the insurance industry in Kenya. Monica, can we go to the next slide, or let me see if I can be able to move?
Yes, Mary, if you can take control of the slides from the button up there, take control, and then you can move them from your end. Up there
Okay, let
next.
me
Yeah.
see.
Yeah.
Okay, fine. So this is what is on my agenda, just an overview of the authority's journey, our regulatory landscape, the impact of the initiatives that the authority has put in place or has taken. What are some of the challenges and lessons that we've learned in this journey? And what are the future developments? So basically, that is a snapshot of Kenya's journey towards inclusive insurance. Back in the year 2012, the authority decided to introduce microinsurance as a separate class under the short-term category. Basically, we have what we call general insurance or short-term and the long-term or life insurance. So we introduced microinsurance as a class within the short-term insurance. And the purpose was for us to be able to collect statistics, which will guide us in to be able to determine which is the next course of action to proceed with respect to promoting the industry. In 2017, we developed the microinsurance policy, which identified that there is demand for the products because our insurance penetration was quite low, and there were quite a number of people who are not served. And most of these are those people who are at the bottom of the pyramid, such that should anything happen, then they are not able to bounce back immediately. From there, we introduced microinsurance initiatives in our strategic plan for the year 2018 up to 2022. And at the same time, we were working on how do we introduce issues of microinsurance. There were some studies and some work that was going on behind the scenes. Finally, in 2019, we segregated such that for microinsurance, it would be now a totally separate line of business, if I may say so, such that we have short-term, we have long-term, and we have now the category of microinsurance. So it was the first step in our regulation making process or in our law making process is to have the item in the principal law. So the first step for us was to introduce it in the principal law, then we will operationalize it later on. In 2022, in 2020, we had the microinsurance regulations approved after going through the whole process of lawmaking. They were approved and ready for use. As you are aware, this was the time when COVID hit the world. And it's like things somehow slowed down. So the regulations were released, but there was really nothing much happened during that time. But as a country, we had started the process of developing our national insurance policy, of which the key theme in the policy is promoting inclusivity. So we now have a draft national insurance policy, which has been submitted to the cabinet for approval and use. In 2021, the authority developed regulatory sandboxes. This was to encourage those people who have ideas to operate in a controlled environment so that we can see if there are any ideas which are viable and which we can progress on. In 2024, in 2022, we licensed the first micro insurer on a standalone basis. Then currently we've licensed 4. There was a slowdown because in our regulations, there was a transition period of 3 years. Those entities, remember in 2012, we introduced it as a class. So there were some entities which were offering microinsurer within the short-term license. So they were given a grace period or a transition period of 3 years. After the 3 years, they were now to establish a totally separate subsidiary to deal with microinsurance. So there were some issues which I'll discuss later on. But in 2024, we've so far licensed 4 microinsurers. There are other applications which are pending our processing and issuance of licenses. And there are other initiatives. The authority is still working on other initiatives to ensure that the unserved people in the country can be served. And although being an authority, ours is to create a level playing field to ensure that the suppliers are doing what they are supposed to do and be able to meet the demand from the clients. So what is our regulatory landscape? As I've already indicated, we have the microinsurance regulations, and now we have a separate license for microinsurers. I've talked about the transition period of 3 years. And for those entities that are interested to do microinsurance, there is no segregation. So we've allowed them to operate like what I would call a composite underwriter, where they do both life and general. But for the conventional insurers, they have to choose whether they want to do life or general only. But for micro insurers, they can combine, they can bundle products because that is the purpose. The purpose is to have a package which can have a life policy, it can have a medical policy, it can have a cover to protect the risk. Maybe let's talk of someone who has, in Kenya, we have a subsector, transport sector, which we refer to as border, where people use motorcycles or tricycles for hire and reward. And it is a very big market. So those people can insure the motorcycle. In the same cover, they can have a medical cover, and they can have a life cover, and they can have a PA cover. So that one is encouraged in our microinsurance regulations. The minimum capital for a microinsurer is 50 million, or the risk-based capital. Once they start operating, we have a model for computing the risk-based capital. So it is either 50 million, which most of them start with 50 million, or whichever is higher. I've talked about issues of bundling of products. And because of the target population for the microinsurance products, we encourage the microinsurers to simplify their processes as much as possible to avoid technical jargon. The claims processing should be very simple and should take at most 10 days. Complaint resolutions should be done within 7 days. For intermediaries or distribution channels that distribute microinsurers, they don't require to be licensed by the authority. We've delegated that mandate to the microinsurer, and they have to train these distribution channels to be able to understand exactly what they are selling. So we've also required them to train the intermediaries and give us records of the same. They maintain the registers of the intermediaries or distribution partners whom they've engaged with. And unlike the conventional insurers, which we issue a license once, subject to cancellation should there be any need, for micro insurers, we issue an annual license. So in this case, micro insurers are required to apply for renewal of license by 30th September of every year. And the reason for this is the reputational risk and the target market. We are targeting people at the bottom of the pyramid. So these micro insurers should be able to demonstrate that they deliver on the promises that they've made. So that's why, as an authority, we thought that for a start, we don't give them a long-term license. We start with an annual license, monitor them slowly. Once that particular segment matures and we are now comfortable, then we can allow them to we give them a license once and we continue with our supervision. There is also another issue of the actuaries. Unlike the conventional where we require the actuary to be fully qualified, for those who are offering actuarial services to the micro insurers, the requirements are not so stringent. So basically, from an authority's point of view, we've tried to be flexible enough to ensure that the supply side is addressed so that they are able to meet the needs of the target audience. And the regulations require that the cover is for 1 year. We don't encourage long-term covers, but it can be renewed. So those are some of the things that we've done as an authority. So what is the impact of our initiatives? Just like any other story, it has two sides. We have the positives and the negatives. On the positive side, we've seen support from development partners who are eager to support the vulnerable people in the community, especially in the areas of agriculture and crop, as well as livestock. We have IFC. We've seen A2I have also come in to support us a lot. It has also attracted partnerships, that flexibility of allowing the micro insurers to use other partners. And they should not necessarily be licensed as an intermediary by the authority. So entities are using the mobile network operators, those companies that are distributing agricultural products, the seed, those small shops which are selling agricultural inputs to small-scale farmers, insurtech farms, the microfinance institutions, and pharmacies for the medical. Over time, we've seen an increase in the number of products, medical health, personal accident, last expense. I'll talk about a challenge with the issue of last expense later on. And this flexibility in the requirements of distribution channels is a plus. On the flip side, we've seen resistance from those underwriters, which were underwriting microinsurance under the general insurance business. In fact, they even went to the extent of lobbying in our parliament to force the authority to to allow them to continue operating as it is. And that's why it has taken some time. You've seen from 2020 up to 2024. we had only licensed one micro insurer. And this is a major contributor to that, because they kept on trying to have that particular provision to be removed. Our industry has not really innovated. They're just taking the conventional products and try to split them and call them microinsurance. So we've not seen really so much innovation. Our players are still sticking to the traditional mindset. They are in their comfort zone and they don't want to come out of the comfort zone, despite the fact that there is demand. In Kenya, just like most African countries, we have a huge sector in the informal sector, where most of these people, their cash flows, they vary. Their needs, their insurance or risk management solutions are different from those people in the white collar jobs. But our industry, the insurance companies, are busy chasing the conventional products, the government tenders, and those people in the white collar jobs. And I think because of these, it has not really attracted the masses. From the previous presenters, you've heard that the margins are very low. So for an entity to actually break even, then they require the masses, which we've not really seen it in our market. Because of the target audience for these services, the reputational risk is high. Because if companies don't honor their promise, then there'll be an outcry. So those are some of the things, but we've seen some companies really who have issued microinsurance, though under the general insurance side, come and help these people in the informal sector who've experienced fires, and they were paid within a very short time, and they were able to bounce back and continue with their businesses. So what are some of the challenges? The target audience, they lack experience with insurance. So most of them view insurance as an investment. And I liked what Source said, that there is a need to make insurance tangible. For these people, they want something tangible, not a promise. So what the players or the insurance companies can do is be innovative enough and make insurance tangible so as to be appealing to the target audience. There is competition from other risk management techniques. These people, they fill the gap. There's some social structures which they've come up with to manage their own risks. Like when a person passes away, there is a way in which the community comes together to raise funds to ensure that they are able to give the deceased a good send-off and even assist the family members. When one is sick, we have what we call harambes, where people raise funds for medical attention. And it has even now become sophisticated in Kenya, because for the elite, they have a kitty where they raise funds, they put in a bank account, and they have their own laws, and where they indicate in the event, when such an event happens, this is what we are going to do. And so it becomes a challenge. And also, I can say, for us as regulators, a lesson, how do we incorporate, or how do we embed micro insurance in these existing social structures? But then there is a challenge, or we need to strike a balance. These structures are currently working. We've not seen any major issue. So how do we convince these people to come under the supervisory space? So those are some of the challenges. We have cultural and religious beliefs. For us in Kenya, it's a taboo to talk about death. So even selling a last expense cover, and it has not really picked up in Kenya. Designing products to meet the target audience. And I would say that insurance companies are not familiar with microinsurance, and they tend to treat it as conventional insurance and thus miss the mark. What are some of the lessons learned? Issues of consumer education and sensitization is very important for people to really understand the role of microinsurance. I've talked about leveraging on existing social structures, but there is also that challenge of how do you convince these people to come into the supervisory space, yet the structures that they have are serving the need. For microinsurance or inclusive insurance, partnerships is a key success factor. So, and there is need for the suppliers of microinsurance products to align their products with the distributor's core business. If they are using, let's talk of those stores that sell agricultural inputs, then their products should be aligned to the core business of that particular store. Information is very important so as to be able to come up with products that meet the needs of that particular segment. And there is a need to balance client value and business viability, not always looking for profits, but at the same time ensuring that the supplier is there and will continue to be there to provide the service. I was just thinking aloud when I was making this and asking myself that could there be need to have a national policy on inclusive insurance rather than putting it under the national insurance policy, which might be forgotten or might get lost in between. So what are the future developments that the authority has? We embed financial literacy in schools curriculum. In Kenya, we've changed our school curriculum. We had made some strides with the previous system. Now it's like we are going back to the drawing board so that we embed financial literacy right from primary schools all the way. There might be need maybe to engage relevant government agencies on how to promote inclusive insurance. This is aligned to the SDGs, so the government has a role to ensure the success of inclusive insurance. There is a need to work with relevant partners to promote microinsurance and inclusive insurance. And those are just my thoughts on this topic. Thank you.
Thank you very much, Maria, for your presentation and for sharing your experiences. All right. Maybe we could have a couple of questions for Maria. Please go ahead and raise your hands. I see there's a question from you, Renata. Would you like to ask that while others finalize the question they would like to ask?
Yes, thank you, Manoj. Hello, Mary. I think we met a few years ago in Lomé, where you made this presentation on microinsurance in Kenya during an aYo conference. So I have a question regarding the financial education. I recall that aYo had a program to train product champions. Do you still have that program? And if so, can you elaborate a little bit? Because I found that a very interesting way of getting to your communities.
Mm-hmm.
Thank you.
Yes, we have. Okay, fine. Yes. Okay, I know we've had a number of programs for education. At first, we had a program for training insurance agents at the county levels, where they trained several agents across the counties. Under our consumer education, we also have a program for champions where we pick on a few people and train them, and we use them as ambassadors for the authority. But this one was on the conventional insurance. But we want to see how we can replicate it for microinsurance, because these are totally different. So it is important to ensure that we align our programs, but that's not, we are not yet there. We are still continuing with the champions, but for the conventional insurance, the program is still going on. Where maybe we train teachers, we get leaders in the community, church leaders, leaders of the youth, and train them, and then they become ambassadors for the authority when it comes to insurance matters.
Wonderful to hear. Titus,
you.
I see you have a question as well. Please go ahead.
Thank you, Manoj, and thank you, Monica, for your balanced but yet frank presentation. Okay, that's not me, is it? My question
please
is,
go ahead.
okay, my question is, I see that you have to be either a micro insurer to offer micro insurance in Kenya, because even those that were doing it as part of general insurance or short-term insurance have had to create subsidiaries. Was there any specific thought process or reasons as to why, therefore, conventional life or general insurer cannot be allowed to offer microinsurance as a business line? Thank you.
Okay, thank you. As I've said, we started this journey in 2012, collecting statistics and see how the market behaves before we made that decision. So from 2012 until 2016, we didn't really see much impact from the underwriters because they were still focusing on the other classes of business. Okay. And they were not giving microinsurance the attention that it deserved because the margins are very low. Mm-hmm. And these people want quick money. So that's when the authority said, for this line to have an impact, it needs to be totally separate from the conventional companies. So that was our thought process why we said that we need to have it separate.
Well put. Thank you very much. Thank you.
Thank you, Mary. Maybe one last question, if anyone may have one last question for Mary. Okay. Well, I guess not. Of course, feel free to type in your questions in the chat, should there be any. I do see that Moses has one question. Maybe we could just add it quickly. Moses, if you'd like to ask a question.
Okay, thank you, Manoj. Thank you, Madam, for the presentation. Unfortunately, I only caught up almost at the end of your presentation, but my interest is on this particular issue you're referring to about there being separate licensing for conventional insurance and microinsurance. I hear you saying you separated the two so that the microinsurers could enjoy the small margins you're referring to. But then my worry is, does that not result into protectionism? And also, knowing protectionism, would that not then also disrupt markets and render them dysfunctional?
I don't think there is any issue of protectionism here, because if you look at the target audience, they are totally different. And we realized that the attention that the conventional underwriters give to the micro insurance, it's not there. And this is an area which, as an authority, we want to develop and increase the level of penetration. So that's the reason why we separated, and then to go so that we can have that dedicated entity who will put in place systems and all that, so as to focus on the unserved segment of the population. So for us, we don't view it as protectionism, and I don't think it's going to destabilize the market. The cake is big for everybody in Kenya, but our players are only focusing on a very small piece of the cake. Just the other day, we gave a license to our largest mobile operator, Safaricom, to distribute insurance products. So since Safaricom is, they have a presence all over the country, we hope it's going to make an impact, and especially to the unserved segment of the population. Yeah.
Wonderful. No, thank you for sharing those thoughts again, and thank you for your time and the presentation. Thank you.
Thank
Mary?
you.
Manoj,
Yes,
just
please.
a little follow-up
Yes.
on Mary. So Safaricom, do they have, is it an intermediary license or is
Yes.
an insurance carrier license?
It's an intermediary.
Perfect.
Thank you.
Yeah.
All
Thank you.
right. So
Yeah.
this now we can then move to our next presentation from Renata Dilias. Renata, please go ahead.
Thank you, Manoj. Hello, everyone. I will go quickly because well, we are already ahead of time. Behind of time, sorry. So I wish to share with you the experience of the CIMA region. Recall, the CIMA region is this zone of 14 countries having a common insurance regulation. So on the first slide, which can we go back on the first slide, please? To the first slide. Okay. So on this slide, you see the name of the regulation that I will comment on. So on the first, from the 1st of August 2024, a new insurance regulation came into force regarding the administration and the distribution of electronic digital insurance contracts. This is quite revolutionary. CIMA did this work over a period of 8 years, using all the experiences from surrounding countries in the area of mobile insurance. Later on, you will get this presentation, and if you click on the blue line, you will go immediately to the regulation on the website of CIMA. Next slide, please. Okay, so this slide is presenting you the multi-partnership model in inclusive insurance, or in general in digital insurance, of which you have got so far a few success stories, BIMA and aYo. So in this triangle, you have the risk taker, the insurer or the micro insurer, the insurtech or the technical service provider, and the economic aggregator, who has the database of clients, subscribers, and members who we need, you know, to reach quickly profitability with micro insurance. In this triangle, what is important are, you know, all the different relationships between the three actors, and those relationships are usually based on on technology. So this regulation, which has been, which became in force on the 1st of August of this year, is regulating the relationships between those various partners, assuming that technology is coming into the picture. Next slide, please. Okay, so why do we need a specific regulation for digital and electronic insurance contract? Well, actually, I believe that we all learned over the last 10 years, about the different risks that we face in mobile insurance or while using technology, trying to access clients in a different manner. And so here on this slide, you see three main risks that we are facing when we introduce technology into the picture. And so we have data risk, risk of market monopolization, risk of inadequate communication. Data risk means, well, there may be a risk of loss or manipulation of data because everything is dematerialized. Uh, Also, it may be that some insurers who are delegating the management to external service providers may no longer be in a possibility to check the reliability and the completeness of the information. Another case, other risk is that, there may be, no transmission of a contract. So, what about following up by the client? Then there is this risk of market monopolization, which is really causing, a serious risk. And this we saw over the last years in many markets. Why? Well, the mobile phone market is characterized by very little competition in some countries. And this has, of course, not such a good effect for the consumer. In some countries, there are only one or two mobile network operators. And well, as they are the master of the game, they also conclude that they have exclusive rights over its subscribers, which is of course not good if the insurer is coming into the picture. Also, in some cases, and this was especially during the startup phase of mobile insurance, we saw that MNOs, the mobile network operators, and the technical service providers were playing a very important role in the design, the advertising, and the marketing of insurance contract, neglecting the insurer. Sometimes they were even presenting themselves on the market as being the insurer. And so there, I already tackle the risk of inadequate communication. We are dealing with policyholders who are lacking sometimes financial education, who may not understand English or French. So, there is really a risk of inadequate communication. Also, this risk is increased because there is no longer a physical document. And, last but not least, what I just said, sometimes the MNO or the PSC is just not mentioning the insurer. So, the people on the ground believe that Orange or MTN are the insurance companies. Next slide, please. So, taking into consideration all those risks and learning from what happened in surrounding countries, especially the English-speaking countries in Africa, the CIMA insurance supervisor has drafted an insurance regulation trying to tackle all those pitfalls. And on this slide, you see what the insurance supervisor is asking the insurance company who wants to use technical service providers or who wants to increase technology while reaching out to their clients. So the insurer must set up a true risk management policy pertaining the data which are managed through those digitalized insurance contracts. So there you see a list of bullet points that you can take, you can read later on. I have some limits in time. I invite you to read them because it's quite important that the insurer is very, very aware about all the pitfalls while managing electronic data. Also, what is quite important, and so far nobody talked about this, we also need to provide access to the database to the insurance supervisor because the insurance supervisor wants to protect those vulnerable clients. Can we go to the next slide, please? So the regulator is trying his best to promote a fair and transparent competition through this new regulation. So just a few bullet points to share with you what is in this regulation. So, for example, any exclusivity clause should be banned in the various partnership agreements which are, set up by the insurance company with all those different partners. All those partnership agreements must be made public. Also, with respect of the various actors in the insurance value chain, they must guarantee that the policyholder has at any moment access to all the information related to the insurance data. And of course, at the policyholder must be free to choose the insurer of his or her choice. Can we go to the next slide, please? Then, very importantly, we saw that MNOs are playing a crucial role in mobile insurance. And sometimes, well, it is very difficult for the policyholder to make a difference between a promotional campaign and buying an insurance contract, especially in the starting up phase when the mobile network operator is providing free insurance to the loyal consumers. So this needs to be clarified as well. Also, it is very important that the amount of the premium is clearly notified to the policyholder. And moreover, in the CIMA region, no policy can start up without the premium being paid. This is quite important. Free, although it is possible that free insurance is provided by a mobile network operator to the most loyal consumers, from the moment that the policyholder is going to boost the premium or later on to buy an insurance policy, the amount of the premium must be clearly specified and of course must be paid before the insurance takes effect. Then last but not least, and this is also notified in the regulation, the insurance company must be capable to check at any moment in time the data in the platforms of the technical service provider, etc., because the ultimate responsibility lays with the insurer and not with the technical service providers. Last but not least, okay, so can we go to the next? Yes. So as you can understand, there might be many supervisors coming into the picture when we are talking about digitalized insurance. And therefore, it is very important that there is a coordinated supervision platform set up by the various supervisors who are going to play a role in this multi-partnership. So this regulation is also defining this partnership between the insurance supervisor, the supervisor of the telecommunications sector, of the central bank, of the supervisor for the protection of the personal data, etc. So this is quite important that they all, they sit together around the table and they provide the necessary licenses or approval, to the insurer, the micro-insurer, or the technical service provider. And when an insurer or a micro-insurer is, submitting a file to get an approval or an authorization to launch a product, well, then the supervisor is requesting in the file to provide all the approvals provided by the other supervisors, meaning the supervisor of the mobile network operator, of the protection of personal data of the central bank, etc. So this is quite important. This is new. It may require a little bit more work, but it is necessary in order to protect the vulnerable consumer. So, this file must be submitted to the insurance supervisor when a new product is launched and also when there are changes to particular products which were already commercialized. Last but not least, this regulation came into force on the 1st of August 2024 for new products, for modifications to existing products. However, of course, there were already partnerships existing. And so for existing partnership, there is a transitory period of 1 year. Of course, also, in the interest of the vulnerable populations. So those new regulations may look complicated. However, I believe they are necessary to provide the necessary protection. And well, in the CIMA region, we are looking forward that this will finally be the trigger, that microinsurance will take off. Thank you. So I hope I have respected my 10 minutes, Monica, and I'm all there to answer your questions. Thank you very much.
Oh, thank you, Renata. Thank you for taking us through the new regulations coming in, and as you mentioned, have a very strong potential to have a positive impact on the market for sure. I know we are already pressed for time, but if we could have maybe